Assalamualaikum warahmatullahi wabarakatuh and good day everyone. My name is Nisa binti Muhammad Yusuf and my ID number is 622-111-24455. Assignment 1. Individual Assignment. For overview, first, introduction. Second, proposed Shariah-compliant financing structure. Third, potential risks and challenges. Fourth, risk mitigation strategy. Fifth, comparison with conventional business loan. And last but not least, conclusion. Introduction. So, Islamic finance products, services, and contracts are financial products and services related contracts that conform with Sharia, which is Islamic law. Islamic banking and finance have its own product and services that differ from conventional banking. So these include mudarabah, wadi'ah, musyarakah, murabaha, ijara, hawala, takaful, and sukuk. So Awas Sdn Bhd is a manufacturing company that is presently looking for an 500,000 ringgit Malaysia business credit facility. So the company's current activities will be expanded with the help of this funding, which will also take the advantage of the manufacturing sectors, developing market opportunities, and substantial growth potential. So financing Awas Sdn Bhd must adhere to Islamic principle in order to maintain ethical compliance and successful business. With the 5 years of business operation experience, the company has consistently increased its revenue each year, demonstrating consistent success. So, sorry. Additionally, Awas Sdn Bhd has established itself as one of the reliable companies intent to increase its competitiveness and fortify its position in both domestic and foreign market with the help of this funding facility. So next, we have proposed Sharia-compliant financing. First, equipment purchase. As a uh, as a Selamat Islamic Bank, we would like to suggest that Awas Sdn Bhd allocate 250,000 ringgit Malaysia for equipment purchase through murabahah structure. So, interest-bearing loans are prohibited under the Islamic Sharia law. So, murabahah financing is used in place of loans in Islamic finance. Murabahah is also referred to a cost plus financing because it includes a profit markup in the transaction rather than interest. So a seller and a buyer would have should both agree to cost and the markup that are then paid in installment. So on behalf of the Awas Sdn Bhd, Selamat Islamic Bank would buy the production equipment and technological infrastructure. Then later, Awas Sdn Bhd will purchase this asset from the bank at the predetermined profit margin with 5-year deferred payments condition. So Awas Sdn Bhd would cover the cost and profit margin by paying the sum in equal installment. Second, working capital. So we would like to suggest that Awas Sdn Bhd allocate 150,000 ringgit Malaysia for working capital through Tawarruk structure. So Tawarruk facilitates a cash flow without engaging interest-based lending to facilitate placement of funds and provide cash for different finance purposes such as working capital, trade financing, and purchase of properties. So, Selamat Islamic Bank will purchase a commodity, for example, rubber, from a supplier at spot price. Then the bank will sell the commodity to Awas Sdn Bhd at a markup price with the deferred payment terms. So, later on, Awas Sdn Bhd can sell the commodity in the open market to obtain the cash for inventory expansion, marketing, and staff training. And the third one, facility expansion. We would like to suggest that Awas Sdn Bhd allocate 100,000 ringgit Malaysia for facility expansion through Ijarah structure. So the contract of Ijarah give them a luxury to get the right of use without taking the ownership of an asset. So literally, Ijarah means compensation, consideration, and return. Technically, it refers to a contract of hiring or renting an asset or commodity to get benefit from user fraud. So, in other words, ijara is a sale of user fraud of service in return for compensation. So, the subject matter of the ijara is the user fraud of an asset or the service that is rendered by an employee. So, hence, Selamat Islamic Bank will finance the renovation and expansion of the warehouse and office space. So, the bank will lease the property back to Awas Sdn Bhd for a fixed period of 5 years. And at the end of the lease term, the ownership of the facility is going to be transferred to Awas Sdn Bhd. And next, potential risks and challenges. So the facing financing Awas Sdn Bhd through Islamic financial structure involve several risks and challenges. So here we have five potential risks and challenges, which is first credit risk. So it is a risk that Awas Sdn Bhd may fail to meet the repayment obligation under the financing agreements. So if Awas Sdn Bhd experience cash flow issue, especially if market conditions change or if the company expansion fails to generate the expected revenue, then it will impact the Selamat Islamic Bank profitability and liquidity. Second one is operational risk. So, it is a risk that arising from internal inefficiency or external disruption that may hinder the implementation of the financing agreement. So, for example, mismanagement of the purchase equipment, infrastructure upgrade, or marketing efforts that could reduce the expected returns. The third one is market risk. So the risk, it is a risk that adverse changes in market condition that affect the client's financial performance. So a downturn in the manufacturing industry could reduce Awas Sdn Bhd revenue, making it difficult for the company to meet its financial obligation. Plus, rising costs for material or labor could also impact profitability and the repayment ability. And then liquidity risk. So the risk of the bank facing difficulties in meeting its own financial obligation due to insufficient liquidity. So for example, Selamat Islamic Banking might lose liquidity if its credit rating falls. So it can be caused by sudden and unexpected cash outflows or some other event cause counterparties to avoid trading or lending to the Selamat Islamic Banking. For example, Awas Sdn Bhd in delays or default on payment. And last but not least, collateral risk. So it is a risk that collateral provided by Awas Sdn Bhd may not cover the outstanding financing amount in case of default. So business asset and equipment may depreciate over time, so reducing their value as collateral. In the event of default, the liquidation process might take longer than expected or yield less than the finance amount. So we're going to next risk mitigation strategies. First, we have credit risk mitigation. So uh, maybe you could conduct a comprehensive review of our Sdn Bhd financial health or revenue trends and debt servicing capacity, and we could also use credit scoring system and industry benchmarking to assess the repayment uh, ability. And next, operational risk. We could assign a committed relationship manager to oversee the use of fund and the project progress to make sure the money are being used as intended and the conduct routine site visit and audit. And next, market risk mitigation. So we could use Islamic hedging instruments such as Mu'ad, Promise, or Abun, earnest money agreement to mitigate the risk from market volatility. Or we could encourage Awas Sdn Bhd to diversify its product line or customer base to reduce the reliance on single market segmentation. And then, liquidity risk mitigation. It could include a grace of period for Awas Sdn Bhd, allowing temporary delays without penalties, but ensure the liquidity reserve maintained. So we could also strengthen the bank's liquidity by diversifying its funding sources, such as sukuk issuances or other Sharia-compliant investment instrument. Last but not least, collateral risk mitigation. So, we could conduct a periodic evaluation of pledged business asset to ensure they cover the outstanding financing amount, or we could just accept the additional collateral such as receivable or guarantee to cover the potential shortfalls. And we're going to next comparison with conventional business loan. So, the Sharia compliant financing solutions from Selamat Islamic Bank has special features and advantages that let it successfully compete with the traditional company loans. So, the suggested product appeals to company looking for a moral financing option by upholding the principle of finance, offering advantages that are both competitive and value driven. So, first, we have Sharia compliant as a unique selling proposition. So, unlike the conventional loans, Islamic financing prohibits riba, which is interest, and ensure all financial activities comply with ethical principles. So, conventional loans are profit driven, charging interest regardless of business performance, while Islamic financing they prioritize mutual benefit, appealing to businesses that value ethical practice. Second, flexible profit sharing mechanism. So Islamic financing can adopt structures such as murabahah, ijara, or mudarabah, depending on the business needs. So conventional loans often have the variable interest rate increase the which increase the uncertainty for business, while Islamic finance offers more predictable cost structure than enhancing the financial planning. Third, risk mitigation and asset-backed financing. So, Islamic financing is asset-based, requiring collateral or direct linkage to tangible asset. Conventional loans may not require asset linkage, but leading it to risk of over leveraging or speculative use of fund. So Islamic financing promotes sustainable financial practice. And the fourth one is social responsibility and economic development. So Islamic finance prioritizes societal benefit and economic growth in addition to profit making, while conventional banks primarily focus on profit maximization, while Islamic banks consider social and ethical impacts, appealing to social responsible for the business. Last but not least, broad market appeal. So Islamic financing is not limited to Muslim businesses, but it also appealing to non-Muslim businesses seeking any ethical financing alternative. So conventional loans may not appeal to business looking for alternative to interest-based financing, but Islamic product address this gap in the market. Okay. In conclusion, Sharia-compliant finance offers a viable alternative to conventional finance, appealing to Muslim and non-Muslim. So investors seeking ethical and sustainable financial solution. Its growing popularity stems from alignment with Islamic principle, emphasizing fairness, transparency, and social responsibility. The suggested Sharia-compliant financing plan for Awas Sdn Bhd shows how Islamic banking concept can successfully foster the company expansion while abiding by moral and legal requirement. So the finance guarantees adherence to Sharia law and offers an open asset-based solution for business growth objective by employing murabaha or ijarah contract. So, Selamat Islamic Bank can protect its interests and build a solid relationship with Awas Sdn Bhd by identifying possible risks such as credit risk, operational risk, and Sharia non-compliant issue and putting effective mitigation plans in place. So, the Islamic financing product is positioned as a competitive alternative to traditional loans in the financing product in the market, sorry, thanks to its competitive advantages, which is include profit sharing plans, asset backing security, and ethical standards. So, in the end, this financing arrangement not only meets our Sdn Bhd financial requirement but also support the function of Islamic finance in encouraging fair, environmentally friendly, and social conscious corporate activities. So this strategy emphasizes the special contribution to Islamic banking makes to contemporary financial markets and its capacity to foster macro and micro economic growth. So that's all from me. Thank you for watching this presentation. See you guys soon. Bye bye.